Afternoon. Today is February 3rd, 2023. My name is Stephen Herwire. I'm the owner of Herwire Financial. Today, after the disclosures and the roundup, we're going to talk about Life Insurance Awareness Month. Opinions, voices, material are for general information only and not intended to provide specific advice or recommendations for any individual. All performance reference is historical and not a guarantee of future results. All indices are unmanaged and may not be invested in directly. All data believed to be for reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. This material contains only general descriptions and is not a solicitation to sell any insurance product or security, nor is it intended as financial or tax advice. For information about specific insurance needs or situations, contact your insurance agent. The article is intended to assist in educating you about insurance generally and not to provide personal service. They may not take into account your personal characteristics such as budget, assets, risk tolerance, family situation, or activities which may affect the type of insurance that would be right for you. In addition, state insurance laws and insurance underwriting rules may affect available coverage and its costs. If you need more information or would like personal advice, you should contact an insurance professional. You may also visit your state's insurance department for more information. Riders are additional guarantee options that are available to an annuity or life insurance contract holder. While some riders are part of an existing contract, many others carry additional fees, charges, and restrictions, and the policyholder should review their contract carefully before purchasing. Guarantees are based on the claims paying ability of the insurance company. Yesterday, the Dow Jones closed at 34,053.81 year to date, up 2.5%, give or take. S&P 500 closed at 4,179.77, closing year to date up 8.86%. NASDAQ 100 closed at 12,783.475, up 18.15% for the year. Gold closed at $1,911.80 per ounce year to date, up almost 5%. Bitcoin index closed at 23,871.3 year to date, up over 44%. US dollar index closed at 101.73 year to date, down 1.7%. 10-year treasury closed at 3.4%, down almost 0.5% from its year start. And finally, the S&P aggregate bond index closed at 202.13 year to date, up 3.59%. What's life insurance used for? Primary thing people think is to transfer the financial risk involved in death to an insurance company. That's what that means. When somebody dies, somebody who would be financially affected will get money. So, for instance, if the breadwinner in a family dies, cash flows to make up for part or maybe all of the loss. Another example is if a key person at a corporation dies, there are monies available to tide over the company during their search for retirement. Sometimes it can be used to pay estate and inheritance taxes. It can also be used as a cash accumulation vehicle with a death benefit. The last major use I can think of for it is to provide for long-term care needs. Note there's a lot of generalization and a lot of omitted detail here. I'm just trying to paint a basic picture. Types, two basic types, temporary and permanent. Temporary is also known as term insurance. Permanent has a variety of types, but we're mostly going to focus on whole life and universal. Term, it doesn't have a cash component. The permanent ones have a cash component most of the time. Let's talk about term insurance first. Generally speaking, it's the lowest monthly cost. I liken it to renting an apartment. As long as you pay the premiums or rent, if it's an apartment, you get to stay. You have coverage. Like rent on apartment, the premiums will go up periodically. On the outset of the policy, you can set the rent or premium to be level for a specified period of time. You could have annual renewable term where it changes once a year. And this one, by the way, initially will be the lowest initial monthly cost, but it gets expensive every year. Or if you only need it for a specified period of time, you could set the cost to be level for 10 or 20 or 30 years. At some point, though, the premiums will rise dramatically. In states like New York, you can't have term life after a certain age. There's no cash component, and it's like homeowners insurance. If there's no claim, i.e. in this case, no death, there is no payout. Permanent insurance, two major varieties, whole life and universal life. Whole life is generally the highest regular premium, but what you get with that is it's guaranteed to stay in force as long as the premium schedule is followed. Universal life will stay in force longer than a term policy, generally speaking, but unlike whole life, it's not guaranteed beyond a specific time. And with the universal life, you can add some extra money as needed up to a point, and this might be necessary later in the policy to keep the policy in force. Both types have the possibility of adding a long-term care rider. Now, the way to think of permanent insurance is like getting a mortgage on a house. If you got a whole life policy, the premiums are set and do not change with almost no flexibility. If it's universal life, there's a great deal of flexibility. Sometimes you go to work for a company and they give you a life insurance policy. Sometimes, a lot of times it's a certain amount for free. The amount and types vary. And if they provide over a certain amount at company cost, it's possibly a taxable event. You can usually purchase more once a year, usually a set multiple of salaries. And when you leave the job, generally speaking, the insurance goes away. Now, some states, like New York, have a requirement that for a limited time after you leave the job, you can purchase that amount that you had in place with no underwriting. Guarantee issue life insurance. You see this on TV. They talk about $9.99 or whatever. I'm not even sure per unit. It usually has a very limited benefit. Sometimes it's known as burial insurance. And there's usually no underwriting or very little underwriting. Because of this, it's usually the most expensive type of coverage you can buy per dollar of benefit. The benefit's limited in a couple of ways. Number one, limited dollar amount. The largest of these type policies I've seen is $35,000 for a benefit. And sometimes, depending on what shape you're in, because they do some limited underwriting, they may tell you that your family or your beneficiaries will not get the benefit for the first 2 or 3 years. Now, this sounds like a ripoff, but the thing about it is all your premiums are refunded in that limited period of time with what I've seen, a fairly generous interest rate. So, there are trade-offs, and this is usually for people who can't get insurance underwritten. Things you should know about life insurance. When an agent gives you a quote, it is a best guess. The final price is determined by the insurance company after underwriting is complete and the policy is issued. And when they do the underwriting, they look at you health-wise. A few other ways, but primarily health-wise. You can have a standard policy, which means you've got a few problems, but they're not too serious. You can be rated, which means it'll be more expensive, but they'll still give you some insurance. And preferred, which is cheaper than the standard, which means you're in a really good shape. Now, when you hear these commercials on TV where they say shop, we shop for you, and they make quotes that sound almost too good to be true. Well, if you listen closely, you'll hear they will say something like super preferred, which means they're quoting the cheapest possible one, assumes you're in the best possible shape. May or may not be true, but just keep that in mind. Also, keep in mind, insurance companies have different standards for underwriting, so one might be dramatically different than the other in cost and rating. Most states have what's called a free look period, which means after you get your policy, you've got a limited amount of time where you can change your mind, hand the policy back, and get a full refund on any deposit you've made. There's also a contestability period where the insurance company can refuse to pay under certain limited circumstances. Usually that's suicide, and if you lied on the application, you knew something was really bad about your health and you didn't tell them. As you get older, it gets more expensive. If you use tobacco, it gets more expensive. And generally speaking, all things being equal, males will generally pay more than females for the same amount of life insurance, because our life expectancy, generally speaking, is shorter than the ladies. Suggestions. Rule of thumb: buy enough insurance to replace your salary. And this is just a vague estimate. It doesn't take into account various life circumstances. For instance, a guy who's married with 3 children will likely have a different need than a guy who's married and doesn't have any children to take care of. Needs analysis can help narrow this down, and even better, getting a financial plan is very useful to really zero in on it. Next steps: consult your qualified advisor to determine if you have enough life insurance. If you don't have a qualified advisor, contact me. I may be able to help. Keep in mind, I'm licensed in multiple states and there is no charge for the call. Want to book an appointment? Go to my website, herwirefinancial.com. You can schedule an appointment using the button on the upper right-hand corner of the web page. 2 buttons over is the YouTube channel if you want to see more videos like this. If your friends want more information, they can follow me on Facebook, LinkedIn, and Twitter, and YouTube. And for those who prefer to use the good old-fashioned phone, my number is 518-631-2569. Have a terrific weekend.